All right, so what's going on, everyone? Welcome to another session with myself, Elwin. Hope everyone is ready for another trading week. Definitely had a lazy weekend for me. Took a couple setups, but they basically hit break even this morning. So I didn't catch anything today. Early in the week, definitely want to be more cautious. Just ready for another day. Hope everyone had a great weekend. Today is gonna kind of be one of those repetitive topics. So it's one of those topics you need to hear. We're gonna be talking about stop loss and leverage. And it's something we've talked about in the past, but I know a lot of traders struggle with setting their stop loss, sticking to their stop loss. Some traders even struggle with actually using a stop loss. And the other part of it is your leverage, because our leverage is our power in the market, and our stop loss is gonna protect our account. So it's like you got a sword and a shield out there, and you got to wield them properly, or end up with your head cut off or your account blown, for lack of better terms, right? So leverage is an amazing thing. It's truly what drove, I would say, most of us to trading Forex. It is what is different than some other financial instruments. Stocks, you're not going to be able to use leverage like we do. You're going to actually need to have that money in your account. But it is a double-edged sword, because in the same breath where you have that power to throw on the lots, grow your account fast, double your account in one trade, you can blow your account in one trade. And I know many of us have done it. I know many of us have, turned into gamblers at times. That's essentially what we become when we throw out the risk management side of things, where we know how to actually take a trade. We understand the strategy, we understand the setup, we understand the entry method, everything. Yet that part of us that puts everything into one trade is the gambler, because a true trader knows that results are going to need to have a large sample size. You're going to need to have several trades, right? And the only way you're going to be able to take several trades is to protect your account, is to have that proper risk management. Now, last Tuesday, we talked about probabilistic thinking, which is something Mark Douglas taught us. And probabilistic thinking is what we all need to have, right? We need to think in terms of probability. We don't want to think in terms of wins or losses, right or wrong, in my feelings, not in my feelings, feel good, feel bad. Trade went in my favor, I'm happy, euphoric. Trade went against me, I'm sad. And euphoria, right? Euphoria is a mofo. You feel all happy, you feel great about your trading, but when you feel euphoric, you lose all regard for consequences. You lose all regard for risk management. So what you need to do is rein yourself in. It's okay to be happy, up on the moon, all of that. But when you feel that feeling because you had a good first trade, you bagged 80 pips fast, you say, you know what, on this next trade, I feel good, feel damn good about this. You know what, let me just triple my lot size. It's not my session, but I know what I'm doing. I'm a pro. And then what happens? The trade goes against you. You end up where you started or lower. If you're lucky, you still have some profits to show. And this could really shit on your momentum, right? Can really halt what you're doing, halt your flow, because you're feeling good, you're killing it, you're going, and then you F up, you mess up, and then it sets you a peg back. So I won't say every, but a lot of traders are gonna go through this, and then what they eventually figure out is, oh, you know what? I'm gambling. You know what? This is not trading. Either they're gonna say trading is not for me, I can't do this, or they're gonna say this is not working, I have to change something. And for those traders who have been there, who say this is not working, I need to change something, or for those traders who are working to change something now to get where they want to be, this is for you. This is for you. So risk, manage it at all times. Keep it simple. What do I mean by that? Have a allotted amount of risk that you have issued to each trade you take. to each week of trades, to each day of trades. You should have a limit for your day, for your week, for your month. This is how you protect your account. This is how you protect your psychology as a trader, because once your psychology is gone, once your confidence is gone, you're going to be shot. You're going to be looking around, depressed, looking for motivation or wanting to give up or whatever. So I feel that the number one thing a trader needs to protect, yes, it's their account, but it's also their mentality as a trader, their psychology, their confidence. Because if you go on that downward spiral where you lose your confidence, where you lose sight of your goals and lose sight of what you're doing, it could become a downward spiral and you can hit rock bottom and you got to climb your way out. So, and this can happen to any trader no matter what level they're at, because it's going to be relative to where you're at. So we're in a constant, perpetual journey with ourselves to constantly stay at this level, at this mindset, and be able to go into that flow state at will when we're in the market, when we're looking for setups, when we're trading, right? So this is the dilemma of the day trader, right? So this is our plight to conquer, whether you need to do your meditations, whether you need to step away from the charts, whether you need to go get in a one-on-one with a mentor, whatever it may be. And part of it will be that self-diagnosis process. What do I need? What am I feeling? Do I need to quit trading this week? Having a trading coach or a mentor can be very helpful because you can sit down with them and talk through these things, but the trading coach won't be able to make those decisions for you. So as the day trader, as the trader, you need to be in tune with self. You need to know what's going on with yourself, right? And in terms of leverage, right? Leverage, like I said, leverage is our superpower, and our stop loss is what's protecting us. But the power with leverage is, as you get more proficient, a couple of things. You're going to be able to raise your lot size because you're more confident in your trading, but also your account should be growing with you. I know a lot of us we might be winning at trades and making profits, but we got bills we have to withdraw to pay bills. So that might be your struggle, is like, how do I compound my account when I need to keep paying my bills? And yeah, that's a battle you'll have to face, but that's a good battle to face because that means you're profitable. That means you're withdrawing. So I don't want to hear you whining about that. If you need to find other sources of income, do it. If you need to get a side job, if you need to seek outside funding, like an FTMO account, something like that, do it. But just grind and, eat noodles for a month. Stay with your moms if you got to. Do what you got to do to get where you want to go, right? So, with your stop loss, you do really need to, and your leverage, you really do need to know what your risk tolerance is. And let's ask the chat, what is risk tolerance? Who has a good definition? What is risk tolerance? What up, Mike V? Being able to handle what you're willing to lose, how much I can afford to lose, money you don't care, lose it. Yeah, I like that. How much you're willing to risk. Those are good ones, because it is going to be it's definitely going to be how much your account can handle, how much you can afford to lose and still survive trading, for sure. But a big part of risk tolerance that we need to take into account is going to be that emotional risk tolerance. How much you're okay with losing. Yeah, I like that, Simone. How much you're willing to lose without losing your mind. Okay, because you could have the money in the bank, you could be good financially, but you losing 20 bucks on the trade just drives you mad and you want to cry and break down. Yet you spent $20 on morning lattes for the crew. And I've been there. Yeah, how much you can lose before you get emotional. I like that too. Right, your tolerance for risk. So it's going to be what you can handle financially, what you can handle mentally. So what are some ways you can identify your risk tolerance? How can you figure out what your risk tolerance is? I'm not asking for a friend, I'm asking for myself, because I would like to know if y'all can share some ways you've learned to find your risk tolerance. Yeah, how do you, yeah, for sure. You want to make it a percentage of your account? Boom, Tony, that's what I was looking for. Over leveraging from experience. Exactly. Yep, it's definitely going to be that percent because we have these set percentages. But that over leveraging, that going through it where you blow your account, where you you push your boundaries, where you find your threshold for what you like to risk, what you're comfortable with risking. That's how you're going to find your risk tolerance. So it's one of those things where traders before you could tell you what they've done, their experience, they could tell you to risk 1% per trade, all of that stuff. Yet until you go through it yourself, until you over leverage, until you go too far past your threshold, only then will you truly understand your emotional risk tolerance, because it's related directly to you. So when you open that lot size that's too big, that you know you have no business opening, when you risk 15-20% on one trade, and then you get back in with another 10% trying to make back what you make back what you lost, and then you start to just shake and you want to close the trade and you're uncomfortable and you're questioning yourself and you're asking yourself all these internal questions, all that internal dialogue. Now you're starting to learn your risk tolerance. Now you're starting to learn what you're comfortable with. Sam says it's also determined on your experience and the confidence as a trader. If you know that only you take the best setups with the best confirmation, I think it's okay to risk more. Yeah, I would agree, and that's exactly what I'm saying, Sam. It comes down to the individual trader, right? I may only risk 1 to 5% per trade, but I have a mentor who can risk up to 15-20%, and they're comfortable with that. They're confident in that, and shoot, they got 6 accounts that they're managing, so they can have a high leverage account. Now, if you're a new trader, if you're a trader with low capital and you got one account, you got maybe $500 in it, a couple $100, you need to manage that account properly. Okay. You need to know that each individual trade is gonna, if you're risking 20% per trade, you got to know that each individual trade can take 20% out of your account. So what does that mean? That means if you take 5 losses in a row, you're done. You're out the game. And there's no worse feeling than being out the game. And just remember the Forexial way, how we trade, it's always going to allow us to have a high risk reward ratio. So, that's always going to be our power. A high risk reward ratio, as well as a managed stop loss. Where can you go wrong other than not sticking to the rules, not sticking to the program? Okay. So you want to be utilizing your stop loss in terms of your setup and risk management. You want to define your risk before entering a trade. It needs to be set in your plan. And you need to account for your stop loss every time. So I've thrown out ways like twin position trading, all of that, all of these different trade management methods to work in conjunction with your actual account, right? And if you have more questions about twin positions, we're not going to go through it today. We have other videos about it. We can talk about it in the future. Sam saying, can you talk about spreading risk through several trades? If you enter 3 really high probability setups with a risk of 2% each, you're technically risking 6%. But if 2/3 trades go well, it can be better than just risking 6% on one trade. Yeah, it's really up to you if you, oh, cool, we got Neo in here. I'm gonna unmute you, bro. It's cool if you want to spread your risk amongst multiple trades. It's also cool if you want to lock in on one. It's really going to come down to you on how you want to spread your risk, but you don't want to have too much out there at a time. So some people will say, okay, I have 3 really sick setups. You know what? Let me filter a bit more. Let me filter a bit more and pick that one that I feel is strongest of the 3. Someone else may say, you know what? Let me spread my risk around multiple trades. And that's just fine. I think either way is fine, but if your risk tolerance for the day is going to be 5% and you're taking 3 trades, you need to break that down into let's just say 6%. So 2%, 2%, 2% on each trade. If you can risk 6% a day and you're going to pick that one trade, then you can go for 6%. But you just don't want to have too much out there at once because it can be very grave. And I'm just speaking from personal experience. I'm speaking from the experience of other traders, and especially us newer traders who are getting a feel for things. And what I'm trying to do is protect you from yourself, because I don't want you to get so up, get so euphoric, have a pop-in week, and then all of a sudden I don't hear from you again. You gave up trading, you're doing something else now. You maybe blame the mentor or blame the market maker or something. And that lack of accountability will actually follow you through life. Just because you're done trading doesn't mean that these detrimental characteristics of yourself are just going to go away. They'll resurface in anything else that you're trying to do, especially if you're trying to manifest, if you're trying to create this, you're doing your alchemy work. You're trying to make a business, make a future, create a reality in which you are in control of the outcomes. You need to find a way for you to be accountable in each circumstance. Now, in terms of trading, this is what the risk management does. It makes you accountable. It doesn't effing matter. If the market maker decides they want to go up 1,000 pips, it doesn't matter. If you're wrong, you're wrong. If you're saying, oh, the market maker screwed me today, they went up 1,000 pips, I didn't use a stop loss, I hate the market maker, I hate my broker, you need to look in the mirror and stop doing that, because it's gonna haunt you no matter what. Yo, Neo, what up, brother?
Good evening, how are you?
Good morning, good morning. I'm instilling a little fear into our students, but it's all for the best, with the best intention.
Yeah, so sorry I'm a little bit late. I was just doing a few things. I saw your link and I thought I definitely want to join that. But I was just a little bit late, so my sincere apologies, buddy.
Yo, nice one on ECAT today.
Oh yeah, really good day
What was your entry method?
today. Amazing day. That Dixie dropped.
Can you hear me okay?
Yeah, you're breaking up a little bit. It might be me actually.
I think you're good. Go ahead, bro. What were you saying?
Oh, okay. Yeah, that I waited for that Dixie to drop. I saw that on the daily chart, and I was looking on Friday night on the close, and it just looked a beautiful drop, ready to drop. Just by drawing some simple trend lines, and then certain key levels it surpassed, and I was in. I did.
What's Dixie again? I already forgot.
Dollar. Yeah, dollar
what?
index.
Oh yeah, duh.
That's just the UK way. We call it Dixie.
Yeah, I mean, it makes perfect sense. Can you tell me your entry method on ECAT though? I was just curious, bro.
Yeah, I've took so many trades today. I've done 380 pips today, actually. But I took a ton of trades. Yeah, I took euro Canadian dollar. You see where it dipped down before the move up, before the shift. I traded off a support and resistance trap. So
like right
you
here?
go down a little bit lower. No, down a little bit lower.
Here?
Right there, yeah. Look at that.
Oh wow.
So we have resistance, and if you go into 5 minutes, you should see, or 1 minute, doesn't really matter, I don't think. You should see some sort of break and retest. So we have resistance turn support.
So you took a 1 minute ECR. That's fire.
Beautiful. lovely little
Yeah.
wick, and I was
Got
in.
him right here. That's a sick one. I was wondering because I was watching this one last week and I wanted to see how it opened. So
Yeah,
I just wanted
yeah.
to ask you for myself. So that was like my little selfish thing. So thanks for sharing that, bro. I'm sure it helps someone else too.
Yeah, yeah. You know, the support and resistance traps are, you know, you get some big pips out of that. Big pips. It's so simple. People make Forex so difficult. And I'm just going to touch on the thing you mentioned about it's the mentor's fault because they haven't taught them this, and this. That's so untrue. You know, it's down to the individual to put the hours in. I know a lot of people that jump from mentor to mentor because that mentor can't, you know, produce the goods, or for whatever reason they can't get their student profitable. But it's really down to the individual to learn. You know, learn the market structure. King. So, so yeah, I
You
just
got
wanted to.
you got any tips for as far as like managing your risk
Yeah,
tolerance, and like figuring out
yeah,
what leverage is your kind of like your sweet spot?
yeah. I'm quite lucky now because I built my balance up, so I'm in a position now where I can take good lot sizes, but I only ever risk 2% of my account. If like today, I will. I don't know what I've done in percentage, but I must have done about 25% of my account today, but I risked another 10% of my profits today. So I could not over leverage, but I'm risking the profits I've already secured in the bag. Does that make sense? So I'm not risking.
Yeah, did you over leverage on the position though, like after you secured
Oh
10%
yeah,
growth and then
I
you
did.
threw
Yeah. Oh
on,
yeah,
so
yeah,
you took your profits and you said, you know what, this is my profits to over leverage with?
yeah, yeah. That's right. Yeah. So I risked 10% of whatever I made today, and I did throw a bit of a big standard on, if you like.
Did
But
you
you
spread
know
the
what?
risk on other trades, or did
I
you
did. Yeah.
on
No,
multiple trades or one trade?
I spreaded it on 3 trades, and 10%. Yeah, 10% I risked of my profit, so I didn't even risk my own balance. That's the difference, isn't it? If you can make money on Forex, but then risk some of your profits, because believe it or not, for the week I've hit my target. I'm only on Monday, so I could afford to risk that 10% because I know hopefully this week I could, make that back even if I did lose that trade. But obviously the trades were taken under my trading plan. Yeah.
Right.
So I run more. Oh, it's not. I'm not just gonna I didn't just place a trade and just think, yeah, let's see what happens type of thing. It was done in the trading plan. So, and that's what's really important, isn't it? Your trading plan. So,
Of course, of course.
yeah.
I mean, it really just
Yeah.
sounds like you're talking about reinvesting in your business. Like you take your profits. Like
Yeah.
you can notice if you had sold drugs, you sold cars, you sold, you had a music
Yeah.
business, you're an artist. You take those profits and then you flip up, you reinvest it, and you keep growing it. You don't just say, "Oh, I made $1,000 today. Let's withdraw, buy some shoes, and start over." So it really sounds like you're mastering the mentality of just reinvesting in yourself, reinvesting in your trading business, and you're finding
Yeah.
ways to 10x that literally. Let
Yeah,
me
well, I'm just compounding on my profits. I'm not putting my balance of my Forex account at risk, because I'm working at my stop losses that will, take me out, if you like, on a certain percentage, and that's really important too.
definitely, definitely. I know a lot of people, they take setups and then they really don't know where to put their stop loss. Some setups you might say, okay, this is a peak low or something, and you get in somewhere like Here we got something on the screen. This is like extreme, but say you get in here and, you know, you say, I'm going to put my stop loss down here. You know, some people do that and, you know, they just are getting dragged 100 pips and they're like, oh my God, what should I do? Should I close? It's, you know, and then you're in the trade for days and days. So, you know, a lot of that is like, you know, your setup is going to come back to your setup. So I think, yeah, it's so important to make sure your risk is proper in your setup. Meaning, like for us, we like those sniper entries. How many pips are you generally using for your stop loss?
It depends what the pair is. So for example, if I'm going to trade pound yen, I always give 20 pips. And the reason for that is because it's quite volatile.
What about just like EU, AU?
Oh, like yeah. EU, 10 to 12 pips maximum. Maximum, that is.
Do you ever go even lower, like 5, 7, 8, stuff like that?
I haven't. No, I haven't, to be honest with you. No. I need to.
You like to give it its room?
Yeah, a bit of breathing space. Obviously, at the minute with you know the euro, it's a bit unpredictable with what's going on in the world, isn't it? So, no, I don't tend to have a problem with 10 to 12 pips. I'll be honest with you. That seems to work for me. But you know, everyone's different. You might have guys on here that use 15 pips. You know, 18 pips. It's just that's within my trading plan, and I stick to it. But as soon as I get to 15 to 18 pips profit, I always break even. And if it comes back and takes me out, it's risk free, you know? That's the beautiful
thing. Did you ever feel like you moved to break even too fast though? Like maybe I should give it 20, 25 and how do you process those moments?
Just cancel out the trade, just walk away. The best thing. I had it last week actually where I had 4 trades come back break even, but I didn't jump back into them.
Right.
Yeah, they did shoot up, but I didn't jump back into them. You know, as far as I'm concerned, once I take a trade, that's it. You know.
Yeah, I'm the same. Once it comes back, like if it came back and I moved to break even, there's a reason I moved to break even based on that trade idea. It's not like, oh, then let's just get back in. Because if that were the case, I wouldn't have brought my stop loss in the first place.
Yeah, exactly. And if you're like me, which I'm sure you are, I just take screenshots and take notes and put it in my journal, you know, and go back to it on the evening, go, damn, you know, I got took out break even. Why did I get taken out? And then you just process, you know, that learning curve. Every day, you know, is a learning curve with Forex. You know, it doesn't matter how good you are, you know, you're always a student with it. So if you can keep hold of your existing trades on a journal or something, I highly recommend that. You can go back to it for reference. But believe it or not, I still got my journal with Human, and I still send it all to him. You know, because he's my mentor, and you know, I want him to sometimes, you know, take me aside and say, look, this is that, and this is this, and you know, and you're constantly improving yourself. You know, every day.
And the thing, some people don't even journal, and I know they in here. Like I know at least half of y'all don't journal in here. So I can't keep lecturing you. You're doing yourself a disservice.
Yeah. Apart from risk management, that should be your second most important thing. Definitely, 100%. My journal it's outrageous. There's so much on there. I
haven't missed an entry since July 2018.
Brilliant. I bet yours is. I bet it takes about a month to get through it all.
Yeah, I got it like all in Evernote. It's all dated, and you know, it's all organized how I like.
Yeah, but it's a journey, isn't it? It's a story, you know.
Yeah, we were looking back at my trades from 2018, and I was like losing 100 pips in a day. I re-entered a trade like 4 times. Like, oh my god.
Yeah, and you just cringe a bit, don't you? Looking at them, thinking, why? But
now I could tell everyone like, dude, don't do it, because I'm actually speaking from what I did, and now I don't do it anymore.
Yeah.
So.
Oh yeah, that, you know, that's why, you know, we're kind of here to make sure other people don't make our mistakes, you know, in the past. So, but yeah,
I
definitely
think
have a
that it's
journal.
something you said is like, you know, the game like Forex is, you know, every day it's something different. Like you got to keep evolving with it. I think
Yeah.
that's why I like it. Like I like the sport of trading because of the variables, because of, you know, it's simple and you have to stick to what you do, but every day it's something a little different. And,
Mm,
you know, I think like, that's just part of why I love it.
yeah,
um,
yeah. What people need to understand as well is not many people do back test. And I've noticed, and I've only been Forex for a very short time compared to yourself, and other people on here, is I've noticed it change already since when I first started to try and trade. So if you're not back testing, then how do you know what things they've changed in the market? You know, so I mean, you know, like this Saturday night, I've just back tested, and people say, "Oh, what are you doing that for? What are you doing?" Because I have to. You know, I want to wake up, you know, in the next week knowing what's going on. And I don't think there's enough people out there that do that, the back testing side of things. And in
yeah,
fact, you actually find out more stuff back testing than you do trading like live, in my opinion, anyway. And you know, you just tend to find stuff out, which is brilliant, you know, for your experience too.
yeah, definitely. I don't know if I would say like you find out more in a back test. You're probably right, but it's definitely different because I learned things live in price action. Yeah, I think you're right because even the stuff I go through live, like, you know, I learned so much observing live, bro. But
Yeah,
then when I go back and look at it in my back test, it really tells the story. So it's like
yeah,
watching it live prepares me for like, you know, price action patterns live. But the back test is like what actually tells the story. And, you know, when we're live, we could think so much is going on. We can just be confused like, oh, is this the stop hunt? Do I enter now?
yeah,
Should I just leave it alone? And then like you need to go back. Like if you just said all that on Thursday and Friday and you're like, fuck, I lost. You like, I lost.
yeah.
And then like you didn't even go back on Saturday to see what happened and find out what the
Mm,
story did. You're doing yourself a disservice. You're doing like your friends, your family, your mentor, you're doing everybody a disservice because you're wasting their time and you're
yeah,
doing your own self, like wasting your money and wasting your time. So
yeah. Well,
you should
yeah. I
feel
mean,
the way.
if you're invested in yourself, if you're putting physical funds into an account to trade, why wouldn't you want to kind of put the work in? You know, it don't really make sense to me. When I lost my 30 grand, the one thing I never did was backtest. I just randomly placed trades, really, you know, and going to like signal groups claiming they can do 3,000 pips a week and all this rubbish. Um, so, you know, from what I've learned back then to now is backtest. That's it. That was the
And I
key for
think
me. That was the key for me. That was the unlock. You know, when I was training with whom, and that was it for me when he told me to backtest, and it didn't half help. 100%.
yeah. And people don't really want to hear that. And we say it over and over. And, you know, people will still come to me with
Yeah.
questions like, what is Euro USD? Like, when does it move? Like, should I look for it during
Mm.
London or this? And I'm like, why are you asking me? Like, go look on the
Yeah.
chart and go find out. And I'm not trying to comfort anybody. I'm not trying to make anyone feel away. And a lot of us, like, we didn't learn how to work hard. We didn't learn common sense. We didn't learn how to, like, have a whole procedure and be focused and stick to a method. Like I know I
Mm.
grew up like, you know, paying like watching all the TV shows, the cartoons, winning every toy, acting out in class, running the streets, like no structure, like, you know, no real guidance, no mentorship, living in
Mm.
a ghetto, you know. So to really change yourself, it can take work. And it can be hard, but I'll say like if you're one of the 58 people that are in here, you know, 56 people that are in here, then that must mean that you know, you're supposed to be here for a reason, whether it's for trading, whether it's to help you elsewhere in your life, whether it's a stepping stone to some other unlock. But this is the first step, and it's not to come down on y'all for those who might feel like this is a personal attack, but it's more so to say, like, really look at yourself, really start to learn what it means to be accountable. So we can only tell you to back test, but until you like really just sit down and do it and start to figure it out, you might blow 30 grand in the process. You might not
Like
come out
me.
the other end. But
No.
luckily you made it out. Not everyone makes it out, bro.
No, just about, literally just about. I've proved a lot of people wrong in my life, yeah. Especially my family, you know, they all love me now. but but you know, when I turned around to them and said, I'm gonna do this one last time, they thought I was nuts. They thought I was crazy. I said, you know, you've just lost 30 grand. You crackers. I'm like, well, I've got to give it one more go, and I did, and I'm glad I did. Yeah, I'm glad I did. But
I'm glad you did too, bro, because you're here
but
with us.
yeah, I don't want people to lose that kind of money on here. That's just not the way to go. It really isn't. It puts you in a dark place.
Yeah,
And
you
to
can lose
avoid
a
doing,
lot.
yeah, and to avoid doing that, you've got to get a plan in place. You know, even in your trading plan should be your back test.
Nice. Yeah, that's nice. I
So,
never thought to make people put that in their plan. But yeah, I guess what
but
Neil's just saying, guys, like you don't have to blow 30 grand to become proficient. It's up to you. Like, you know, do you want to start managing your risk now? Or do you want to say like, oh, I'm gonna make it back. I'm gonna make it back. I'm gonna take this chance. I feel good about this trade and let's go crazy. So yeah.
yeah.
Just gonna check the questions here and then we can kind of close it off. Just want to have that kind of discussion this morning. Okay, so Sam was saying a while back that he thinks, I think I'm in the long term. If you know that you have an 80–90% success rate over the course of several years, it can become more comfortable to risk more since you know the long-term success. Yeah, for sure, bro. Especially if you're like over 60%, go for it. But yeah, I know traders who do 90% who've been trading for 30 years older than us, and they stick to 1% because that's what they do. But you know, they old school and that's what they feel. So if you can be a proficient, successful trader and you're proving your point year after year, month after month, week after week, go for it. But those that are still struggling to get it down, dude, just open $100 account and risk $1. Like I'm telling you, you'll get the same effect, like just figuring it out.
Yeah.
Kyrie says, it's not about the pips, it's about the move. Focus on the move, not the pips. The pips will come. Nothing more than 3%, mainly 2%. Nice. Tony was saying now he journals every day. He didn't do that. I know, bro. We went over that. Simone said, what are the most important things your journal should have? You want to take that one away, Neo?
Most important thing is to take the screenshots of your wins and losses. More importantly, your losses. And what I like to do is, I'll mark it up. I'll put arrows to certain wicks. I'll look at times, you know, when I lost that trade. And also put on. Well, I put on daily, 4 hour, 30 minutes, and 5 minutes. If I've lost that trade, I do a top-down analysis as to why I've lost that trade. And sometimes, you know, things don't go your way, and it is what it is. That's just the market. No one can get 100%. But if you've done something wrong and it's outside of your trading plan, when you do mark it up, you kind of realise and you'll think, right, okay, I ain't going to do that ever again. So more importantly for me, losses in my trading journals.
Yeah, definitely. Like the losses are going to have a lot more written there. Usually my winners just tell me it has a picture of the final trade and, you know, my take profits and percentages. But my losses, especially the rough ones, they can end up with like a whole paragraph of self-talk, me thinking like what I went through, what I was thinking, why did I do that? Why did I take some signal from somebody? Whatever it may be, it's all written there. And when you look back at it, you can process it, but also you let it out, because if you don't journal and write it all down, write what you were feeling, all of that, it's going to linger, and you're going to be biting your tongue, and you're going to just feel like you want to blow up and punch a hole in a wall, and you're not going to know why. So these are ways like,
it's very bitter, isn't it, when you lose a trade and you know you haven't done it to the best of your ability. That's really frustrating, and you want to slap yourself sometimes to think, oh, why did I do that? You know, why? We're all guilty of it. You know, I'm guilty of it 100%. But it can get very frustrating. But it's okay.
Yeah. Like, long as you
see, it is
hold
what it
yourself
is, you know?
accountable.
As long as you have, and if you got very good risk management, it shouldn't even really bother you financially, you know, on your account. Whereas before, I was massively over leveraging to lose that 30k. So, you know, not sleeping all night, looking at the trade, still in drawdown. Oh my God, you know, I'm having a meltdown, and then your account gets blown. That's the worst feeling ever. When you wake up to minus. Worst feeling ever. But as long as you risk manage your trades, it shouldn't really affect your trading, in all honesty.
So just, you know, like with journaling in life, period. You journal because, you know, Doug Funny, dear journal, write down about the girl you like, all of that crap. But in trading, you know, it's about like figuring out exactly where you are. Every trade I take, I put, you know, what the pair was, what the long or short, and what the entry method was. So that's something that's big for me, is always putting what my entry method was into the trade, because one of my biggest rules I break is entry method. That's kind of where I've struggled as a trader, is sticking to an entry method, which I'm amazing at, right? But then there's that point where you see these setups and you want to get in them, so you look for other entry methods. So that's kind of been my trading journey, is just making sure I'm sticking to my entry criteria. And yes, my entry methods have evolved over time, but it's that transition can be a bit bumpy. So if you're doing that, if you're exploring other entry methods, or, you know, you're tweaking your setup a bit, just really, you're tinkering with it, just really make sure you're journaling every part of it. And especially like when you go back, you're like, oh my God, that shit was not working. Why did I keep doing that? Like, you can tell I'm talking about me because I did it so like entering on lower time frames, going against momentum, because I'm trying to catch a move right then, and really it's just a pullback. And then I look at my journal and I did that 10 times and it failed every time. I can tell myself, oh, I'm a pro, oh, I know what I'm doing, oh, I'm sniping lower time frame. Fool, no, you're not. You're getting stopped out, and the results are in your journal. So it will keep you honest, man.
Fool, no, you're not.
That's self-talk, man. All right, bro. We got a couple more. Tony was saying time, risk amount, stop loss, overall thought process with a screenshot. Perfect. Yep, that's what you want. Anything else you want, back test later. Dion was saying, can you get the recording? If you, message me at Elwin Coleman about the recording, bro. And back to the mentor and success discussion. They're saying that, it says that mentors don't guarantee you success, action does. Yep, fact. And Laura said, bro, I could tell you from the Midwest, bro. Shots out, baby. Okay. All right. Do you even want to look at pairs? I figured we got all week to do that. We'll be in Win GPG with Human tomorrow. Do anyone have any other questions for us? Anything before we get out of here, guys? Hey, I really appreciate you showing up, Nia. I'll make sure I send you the links, because I be forgetting sometimes.
Yeah, no, I did see it, but like I say, I've just just really busy today, and I thought, right, I really want to jump on and try and put my little bit of input. Whether people take it on board, I don't know, but it's. I hope it
I think it's
helps.
very helpful, bro, that you can really share from your experience, and you're a prime example. You made it out the other side, and you know you're here to share with us every day. So I can't say thanks enough.
Oh no, anytime. You know, you guys gave me the keys.
All right, brother, that'll do it. We'll see you guys tomorrow. Have a great one.